All right, hello, welcome, and good evening, traders. It is Friday, end of the week. It is April 19th, 2024. Let's get into the markets. A pretty exciting day today between Israeli airstrikes overnight, skyrocketing oil in the after hours, which turned out to be a nothing, and then it was down today, or pretty much flat, like it never even happened. The markets were down early, then they were up, and then they were down. Where are we going? What's going on out there? There's volatility everywhere. The VIX up another 4%, but still only at 1871. So the VIX still pretty low. So volatility can still increase, but really it's not doing a whole lot of anything. It might feel like it to some of you, but it's really not done much of anything here. Let's get a sense of the markets, and let's take a look at some of the charts first, and then we'll actually jump into take a quick look at our account and how things are going. But overall, here's what we're seeing in the markets. Let me jump off screen with you. Here's where we are. And what I wanted to point out here is this is a pretty nice spot on the weekly for ES. So ES pulling down on the weekly. You know, you've wiped out in 3 weeks. We have wiped out 1, 2, 3, 4, 5, 6, almost 7 weeks, but we wiped out 6 weeks in 3 weeks here. With this week being a pretty ugly down week. You had tip over here. It's a PSR bearish signal. MACD's heading lower. RSI is heading lower. Squeeze momentum's heading lower. So the weekly is pretty bearish, but it's holding this 21 EMA today. A little dip below, finished above. Interesting. We'll see if that area here can potentially hold and give us a reason to hold this particular area. If not, you know, we might have some resistance down here about 48.33, 4,800, and 4,700. So there are some other areas here to find something. But really, when you look at this overall, let's throw a fib up on here just for the heck of it and see what things look like from the lows here. To put things in perspective, you know, and the one I don't use like the 382 fibs too often, but I'm going to put it up there. Maybe we'll even put the 236 on just for the heck of it. Okay, 236, we pounded through that, that's why I don't even use it. It's like it's almost never helpful. But we haven't even retraced, you know, roughly 30% of this entire move. Now, in one pullback, you know, that might feel like a lot, but we still don't have any sense of lower lows, lower highs, any of that stuff until this thing turns and tries to make any kind of a move higher. Then we'll see if we're starting to get a new bearish trend. But right now we're still in a bullish trend, a pretty solid pullback. Can't doubt, you know, can't deny that. Pretty strong to the downside. But look at the daily here. I think one of the things that stands out on the daily chart is, yeah, MACD is falling. Yes, RSI is falling and is now in to oversold territory. The squeeze fired to the downside. All that was good. We saw that coming, okay? And you might have had a chance to play it. We did put a few BA trades on, and we've made sure our hedges are all on, okay? So which is all good. And for the most part, ES, this week was a pretty solid down week. It had been pretty orderly until this week, and then pretty significant. But today, pretty long-wicked hammer candle here at the 3 ATR. I'm not saying we're bouncing next week, but if it would not surprise me to see maybe a little bit of a rally. Now, can that rally be back up to the top of this downtrend or something, or maybe to the 50 or the 21? Yeah, and then we keep going lower. Absolutely. I'm not saying that this pullback is just temporary in here, but you get into some areas where potentially we could see this thing turning around. And one of the things, I don't mean a big turnaround, so don't go out there and say, well, Tom said we're bouncing next week. Okay, it just wouldn't surprise me if we bounced next week. And I think one of the things that's interesting to watch on ES, and I want to see if I can pull this up on TradingView as well, would be volume. Okay. So let's see if we can take a look at now. Today's volume was larger than the last couple days. Let me see if I can re-screen share this and take a quick look. On TradingView, I have volume pulled up. I don't do it on TOS. Okay. Now, on the weekly, volume has been increasing. So you can see this move just getting bigger and bigger as you pull back. Here, volume had been decreasing every day until today. Okay, so we had been dropping, but on lighter and lighter and lighter volume every single day, with a bit of a reversal today. Even though we finished lower, we didn't reverse anything, but we came well off the lows on decent volume. Again, does that mean anything? Not necessarily, but it does mean that there's potentially some hope for a little bit of a bounce next week. If you got caught with your pants down and you didn't hedge yourself properly, any kind of a bounce here would give you the chance to do that. But hedging now, the horse is out of the corral right now, and you've already missed a good chunk of that. All right, so there's ES. More damaging than ES, though, is the NASDAQ. This is the worst looking chart of the bunch. So NQ, worst looking chart of the bunch. A pretty volume has been pretty even this week and a little bit of an increased volume today, but there was really no major reversal or come up off of the lows. In fact, we closed almost near the lows, breaking the 3 ATR. This is a big, ugly, giant candle. Things are pretty weak here, internals, weekly and daily. Of course, there's nothing good there. And you've broken the 21 EMA on the weekly. So not only did you break it significantly here on the daily, you've broken it on the weekly. And even on the daily, the 200 is coming into play a fraction here. So the NASDAQ looks a lot worse. And this is the one that probably hurt us the most. Not ES, but it's really the NASDAQ, which is really hurting our trades the most. And we only have 3 trades on, so it's not like we've got a major amount in NASDAQ. But we had 2 trades that we ended up closing today, partial trades for losers. Simply on that note. All right, let's take a look at oil. Oil's had a really interesting week and a really interesting overnight session. If we zoom in on oil, I mean, here's the overnight session when Israel attacked Iran. Okay. Oil had been running up until this week. We had a pretty good pullback going. Okay. That pullback was already well into place this week. Big drops leading up to this, everything falling. So right now you're just thinking everything's continuing to fall. Big spike last night, overnight, all the way up to about 85 and change. But by the time we opened, it was all the way back down and flat. So where we opened is pretty much where we closed on oil. Big candle wick to the upside. So showing that there's still some bullish opportunity here. We bounced off of the 50 on the daily, and we're still holding above the 21 and the 50 here on the weekly. In fact, last week, even on a down week, we had the 21 breaking above the 50, and this week it just continued to stay there in a bullish trend. So oil still bullish, nice pullback. If I had the buying power right now, I would absolutely be adding something in here like a 112 trade right now. So I think this is a good candidate. We have a lot of oil trades on, and when we look at our allocation amongst the different sectors, just to give you a sense of what our account looks like, I want to share it with you. On ES, okay, we're sitting at about 27% of our total buying power is in ES, 18% in bonds, which we'll get to in a minute, 17% in the Russell, 14% in oil, which I'd love to add more. And then you've got the Aussie dollar, a little bit of NASDAQ, and a little bit of wheat down here. And then Bill sitting at a big 15% of the account. So overall, I like it. We are not overweighted significantly in ES. We've got decent bond exposure. We've got some RTY. Our NASDAQ exposure has been dropping and dropped more when we closed some trades today. And then oil's just kind of sitting out here. So we're in pretty good shape as far as allocation goes. I do like what we've got going on. Anyway, there's where we are on oil. Looking at gold today, well, you would expect if you think gold's a safe haven, it's going to continue to keep plowing its way higher. It is in overbought mode, and it's just staying in overbought mode. Now, nice consolidation here. Okay, not really a flag, maybe a little bit of a pennant type of a situation here where we may have broken back to the upside. Gold still just pounding its way and powering higher, looks really strong. Gold's been a good bullish trade, just not something tradable right now for us. Bonds. You know, bonds is one of my favorites in here. So let's get into it and take a look at what's happening in bonds. We've been in this downtrend. Okay, a nice orderly downtrend for months and months since the beginning of the year. So almost 4 months into just a nice orderly up and down downtrend. I told you back here that both of these candles are a bit of hammer candles, especially this last one where we bounced off of really the 618 fib level. We reversed. Then yesterday pulled back a little bit, but we still held above the 618. And today, I don't know if it's easy to see for you. Okay, exactly hit the 618 at the lows of the day. We ran higher and then finished just off of our lows, but we still finished up on the day for bonds. I like the way bonds are performing here. MACD is heading higher. RSI is heading higher. The squeeze is at over 8 bars long here, which is typically the average. Okay, so that shows where we are when we're sitting on these things. So sorry, maybe I didn't have the screen share on, but here's that oil. Here's that 618 fib, okay, that we've reversed off of the hammer candle, moved higher, a little bit of an inside indecision day. Okay, today another inside day from the body, but the wick pretty high, but right off of this 618 fib, which is where typically we will see a good number of reversals happen. Does that mean it's going to happen here? I don't know, but it is a good chance that maybe this thing continues either sideways or up here. So I do like what we're seeing in bonds. All right, copper still off to the races. This thing is just heading into the stratosphere, crazy high, overbought, overextended, and who knows how high this thing is going. It's overshot, okay, our recent highs back here, which was the size of this channel. So at any point here, you would expect some sort of a pullback in copper, but you aren't getting one right now. NASDAQ, we already covered. Russell today, you actually had an up day in the Russell, okay? At least in the after hours, okay? During the day session, you had rallied up, finished lower on the day, so a little bit down in the Russell, but in after hours, right now you're looking at a little bit of a reversal. I think this candle for the week bodes well for the Russell. It's a bit of a hammer. What we would have to see, though, is we're going to have to get back above this 2026 mark up in here. So we got to get back to the previous support line here. That's probably now going to act as resistance. We're going to have to get above that line in order to show some reversal signs in the RTY. But other than that, I kind of like where it is overall. We've got a 112 trade is up 114%. We've got a ratio spread down a fraction. And then we've got a strangle in there that's down just a couple $100. So overall, I like where we are sitting in here. I think this bodes well for our strangle potentially. And then on the Aussie dollar, another down week here. Bullish trigger though. So we triggered a bullish, or I'm sorry, a bearish PSR signal I was looking at yesterday or last week. Bearish PSR here. Everything's bearish on the weekly. On the daily here, though, pretty nice reversal candle. We started to try to reverse in here. Everything gave up a bit earlier on the day and then closed pretty flat here overall. So I like the candle today. I think this bodes well for the Aussie dollar. I think this is an opportunity to potentially look at something in here, but we're going to have to wait to see if we get any kind of follow through on this at all. All right, so there's where we are on some of the major charts. And then you don't even probably want to look at too many of the sectors today. But if you did, you'd look at semiconductors getting whacked hard, 11% down more. Tech stocks down. We already know it. The NASDAQ is getting beat up today. So that NASDAQ was down 2%. The S&P wasn't even down a percentage today. Okay, not even 1%. Okay, like 0.87, 0.88 of a percent. So very little going on in the SPX compared to the tech stocks. Tech stocks is what's leading this thing lower. Communications down 1%, and then consumer discretionary down about that same 9%. Leading the way, regional banks, utilities looking strong, financials looking good, energy looking good, oil looking decent here for a reversal. Okay, so you've got as well as consumer staples really starting to. So a lot of your defensive sectors looking pretty good overall on the sector list. And then lastly, we don't have to look at the charts, but you can see Apple losing another 1%. This thing's losing another support level in here. If we want to bring this thing all the way over, I don't want to get too much into stocks, but losing potentially another support level here. I think 160 might be an opportunity for people to start to dive back into Apple. So this would be, we had the double the triple top here. I'm going to pull some of these lines off because I think they no longer make any sense to keep an eye on them. So we'll get out of these. All right, but this is interesting. Let's see if Apple starts to put in any kind of a base in here. Microsoft getting smoked, hammered down pretty good. You're at the 3 ATR on this. Not a whole lot of support yet for Microsoft. Amazon down 2.5%, breaking the 50, not looking too good. Here, Meta down, breaking the 50, maybe a gap fill in its future. This thing's looking ugly. Google still trying to hang in there, dropped down, tagged the 21 EMA, finished above it. Google still looks the best. NVIDIA down 10% today. This is what's leading the market down. It led the market up, and now it's leading the market down another 10% today. This thing was up as high as what, 974, and it's at 762. Okay, 230 points, over a 25% drop in NVIDIA. Okay, I feel bad if you got long this son of a gun up in here, but you could see you were overbought again with the steam just coming out of this thing. Okay, so you saw it coming, and you knew it was coming at some point. Now, how far does NVIDIA drop? And then Tesla, it's just continuing to sail its way down lower, breaking another key support. So this support level pretty much just toast at this point in time. No sense even keeping half of these on here. You're really at the bottom of this channel, okay? Breaking the bottom of this channel, but we'll see if we can get back in the channel. Tesla, not looking too good. Could be more downside. So I fear a lot more downside. AMD, nothing looks good. Okay, except Home Depot holding that 200-day moving average. Lululemon, okay, starting to pull up off of its lows. Disney holding the 50 EMA. Shopify holding the 200. Boeing holding the 3 ATR and just holding sideways and looking to improve a bit. I like Boeing here. I think it's very interesting. Okay, MasterCard, your financials, not doing too well overall. Let's take a look. Goldman Sachs holding the 21 and staying above that. JP Morgan bouncing off of lows here. So there's stuff out here that looks good. Schwab, I think, looks fantastic. SoFi, it's holding its own. Okay, it's still a dog and it's down to 7. Okay, I don't like the stock at all, but for some reason a lot of people do. I don't know. This stock hasn't moved for a couple years, so I don't know what you're seeing in here. And then Square, new lows, PayPal, trying to hang in there. But McDonald's, really like the way McDonald's looks as well. So I think heading into, McDonald's there's a couple stocks with some nice updates. United Health, good update. J&J, decent update today. Big update today. Abbott Labs. So there's stuff out here that's green. It's not all red. The only thing that's red is your tech stocks here. Most everything else holding in there pretty well. But if it's tech related, it's getting smoked. Okay. Techs, which is your semiconductors as well, getting destroyed. Everything else, not too shabby. All right, let's take a quick look at the account and jump in here as we head into the weekend with you guys. And I just want to share where we are on the trading account. Delta came in a bit today, 861. We did remove some trades, so Delta's back in line under 0.2. Theta is still in pretty good shape, 0.38, dropped a bit today. But the changes we made didn't really affect our theta too much. Net lick is down fractionally, but if you look at the beginning of the week, and last Friday, 461, today, 459, we're only down $2,000 on a really rocky week in our net lick. Okay, now our realized gains and losses didn't fare so well, but our net lick really didn't even change this week, 0.5%. Okay, buying power coming back in. We're back under the 60s, so we're in the 50s again on buying power. Now, we did take a pretty good hit today. We closed out 2 losing trades, not the whole trades, but we closed out parts, naked puts on 2 NASDAQ 112 trades. It hadn't been on long enough. It's unfortunate they're only been going for about 2 weeks now. On it. In fact, one of them was 16 days, the other one was 22. So one of them was on for just over 2 weeks, one was on for 3 weeks. Unfortunate timing on both of those. The markets dropped, and we hadn't been in it long enough for the naked puts to really decay. And then with the IVR in NASDAQ of 80 today, so the NASDAQ IVR, 80%, that volatility got us, so knocked us out of the trade. We weren't close to our strikes at all. We could have held, but we're going to follow our plan, and we're just going to stop out. So overall, down for the week. We had some earlier losses in the week. We had a good day yesterday, so we were doing pretty well for the week until today, and we got knocked down. So there's where we are on this account. Let's look at what we closed. Okay. First thing is we did book some, they're not losses or losing trades necessarily, but we did book losses on our put debit spreads of a BA 112 and a long term. We had already booked the gains in the naked puts. So these are really just booking the final losses, but the gains were exceptional. BA 112 on NASDAQ, we lost 3,100. This is a $440,000 account. So not even a 1%, it's like a 0.8% of a percentage loss. And then on the other naked put here at 66, it's about a little over a 1.5%, 1.4% loss. So both of these, I mean, we don't want to lose, but we sized them appropriately. We stopped out of them where we should, 230% roughly on both of these. So we did exactly what the trade plan says to do. And you know what? No effect really on the net lick because we had already been losing on those. It just makes the P&L a little more ugly for the week, but still, we are still up 12% year to date on our realized gains and losses. So despite some losses for this week, which was a pretty good hit this week, to lose 11 grand, but 11 grand on a $460,000 account, okay, is 2%. Okay? The NASDAQ lost 2% today. We only dropped 2% in realized gains, for the entire week, and we only dropped 0.5% in NASDAQ. So pretty happy with where we are. Things are holding up pretty good. Hedges are doing what they're supposed to be doing. If we look at our IRA, and what I want to point out in the IRA is the IRA is built mainly on long-term 112 trades. Well, you can see that our net lick was actually up for the week. So we're actually up for the week in our IRA. Okay, we didn't close anything, no gains, no losses. Okay, well, we're in good shape overall on net lick for this. So I don't mind the way we're set up. We're just not going to just stick with long-term 112 trades. That's fine. If that's your plan, it's all good. It's going to be a lot safer if you're in the 112 or long-term 112s on ES. Those have been performing exceptional. All of our losses have been outside of ES. Okay, it was bonds this week, $5,600 loss on bonds. Another 2,800 on 112 futures that we traded this week. Okay, this is really where your losses have come from. Nothing else, and nothing to do with ES at all. So everything in ES doing pretty good. Okay, everything that we lost this week was really due to outside of ES. Does that mean I'm going to scrap everything and go back to ES? No, because that's not the plan, and I'm not going to change my plan because of one kind of ugly week, but only down 0.5%. That's not a reason to change direction. So we're in pretty good shape. I like where we are. IRA is up for the week. Fantastic. So we've got a lot of things still going our way well, and I like where the markets are sitting, at least from the ES standpoint or the S&P. I do not like where the NASDAQ is, and I do not like a lot of the tech stocks. I think they look horrendous. I think there's a lot more potential damage to go, which maybe doesn't make everybody feel better, but I think you got to be paying attention. If you are long tech stocks, you're not going to have a good week, or maybe the next couple of weeks, who knows. If you're selling puts in tech stocks, that's not working out too well either. In our active trader portfolio, didn't put anything new on the last couple of days. Need to let this market chill out. But as you can see from the charts, there's stuff out there that looks pretty good. So I think next week we'll get into some different types of trades, probably not hanging in the tech sector, but we'll probably start to look at some of those other sectors that are hanging in there pretty well. All right, hope you guys all fared well today. Okay, we take some losses. We trade our plan, we move on. Not a big deal. We're down 0.5% for the entire week. I will take that any day when the market is down significantly more. In fact, what is the market down for the week? If we look at the week, the last 5 days, the market is down 4%, 3.9%. So almost 4%. The market's down 4%, and we are down 0.5%. You gotta love it. Okay, you gotta love having a plan. Okay, that's meant to strategically keep you moving in the right direction and keep you consistent. Okay, losses are part of the game. If we won every single trade, I wouldn't be on YouTube talking to you. I'd be in Bali somewhere sitting on the beach. All right, if you like this video, click that like button, thumbs up. Have a great weekend, everybody. Enjoy the weekend. Go do something relaxing. We'll get back at trades on Monday morning. Everything can wait till then. Bye-bye.